Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how much money I made from swing trading stocks over the past month. So I hope you guys all enjoyed this. If you do, smash that like button, subscribe. And I know this past month has been extremely volatile. Extremely. One day going up 5%, the next day going down 5%, right? So how do you navigate? How do you trade during these times? We're going to be showing you guys my approach, my mindset, and how we're profitable during these hard times. So smash that like button, subscribe. And if you guys are like, who is this random guy? My name is Carter. I'm a full-time trader in the market, and I have been for the past 7 years. We do have an amazing school where I teach people my strategies, my approach, but more importantly, how I find these stocks, giving insights, setup, strategy. I help you build your own strategy. So check it out down below, and you guys can get 51% off by using code SPRING25. So check it out down below. Only 5 spots left for that code. You guys have been absolutely loving it, so check it out right now. And one last thing, we do have new merch, which is something I've never done, which is so exciting for me. I have a full shipment coming in, but you guys can get an early sale if you guys check it out down below. You guys can use code dividends to get 20% off. So check it out. There's so much cool stuff, and we're going to continue to add to it. So let's jump into this here. So, all right. So we're going to show you guys here our handy dandy trading journal here. Now, this past month here in April, we're up near and around $2,800. Our win-loss ratio is actually pretty decent, so surprisingly, given all of the turbulence in the market. We're in on one loss with Google, but we've been actually managing it very, very well, slowly getting out of the position as it goes up, which kind of seems crazy, but Google is one of those stocks, and I believe that's the stock we're down on. And yes, that's Google here. So Google here is just one of those positions that started selling off even before the full market selling off, and we kind of averaged in a little too early. And I don't want to put 40 50 grand into this stock and average down on it. I would rather just slowly get out of the position for a small loss and then use that money for other better returning investments. So all right, let's kind of look at the performance by strategy. And if you guys want to get this trading journal, I'll put it down below. It's like 20 bucks. You guys can get it, and you guys will never have to worry about having a trading journal, because this thing's sweet. But looking at this here, this is why I love it, is because it has this performance by strategy. So you guys can see that the breakout strategy really hasn't been our bread and butter. We know the past several months beforehand, like if we went and we go and we look at, like, let's just say, December of 24, we'll know, the breakout approach here was the approach. The sell-off strategy wasn't even on radar here on this one. So, now as the market starts selling off, we're just taking advantage of that sell-off here, and we are riding these waves down. But more importantly, there still have some basic technical analysis behind them. So let's talk about here a couple of them, and we'll look at Mags and Root here, because those are our two best returning stocks. So with Root here, we actually took a day trade on this thing. So we got in and out of the position within a single trading day. Now, the reason why, everybody asks me, why do you day trade it? Why wouldn't you swing trade it? You're a swing trader. Well, during market conditions like this, where we're seeing huge moves after hours, where sometimes after hours it can go squeeze up 4%, but it also can squeeze down 4%. I don't want to be in on a position with $40,000, $50,000. Why would I want that? So we've been really limiting our account size. So normally we try to trade with about $20,000. Now we're trading near and around about 15. This will help reduce risk, and when I see other investments with great possibilities for a good return, then we'll use that money and put it there. But let's talk about Root here. So with Root, the first thing I looked at was trends. Obviously, you guys know I'm a trend trader like 90% of the time, and you guys can see it has this beautiful upward trend. So we have this really nice little trend line just like this here. So each and every time it hits this trend line, it hits it, and we have good buying pressure on it, right? So it hits it, buying pressure, buying pressure, buying pressure, buying pressure, and recently hit it again. So this was the first reason I got notified, was because of this, because of the trend. The next thing I looked at here was moving average lines. You guys will notice we have the red, the blue, and the yellow. Now, the main difference between these is going to be support levels and resistance levels. So when a stock is above it, like it is up here, it's going to act as support. When it falls below them, we could see it hitting as resistance, like in here. So ideally, you want to buy when the stock is above it, right? The next thing here is looking more in depth at these moving average lines. And you guys can see that it was hitting that pretty much that blue line, which is that 90-day moving average line in the past. It also hit the 50 here. So since the breakdown of the 50, we had a good indication it could see, a move on the 90 here. And the main reason how I kind of had that idea is because if you look right here, one of the best indicators for this is if the previous day's closing prices doesn't break above the high of the next day. So you guys can see right here where it hit it, and that next move we had a push above that close right here. So let's go ahead and see. So about right here, the high of yesterday, right there. So if we got that breakout, that could have been a good entry point, right? Also looking at lower time frames and such. So all right, let's go through this again. We have a stock on an upward trend, sold off down to a trend line, also the moving average line. But then we look at the RSI. The RSI stands for the Relative Strength Index. At the time it was trading for a 33. The last time it was trading for a 33 was back in this range where we saw good buying pressure. Now the next thing is looking at the breakout. And this is exactly what we saw normally with this position, or a position like this, I should say. We would get pretty much in on this position on the breakout, right? On the breakout of the trend, which still could have worked very well even if you got in, on the breakout of the trend in this range from about 115 to 117, you still would have made money off this trade. But we didn't do that. We waited for the breakout and the new trend to form, okay? And then we had this huge push above the resistance of the previous day. So you can see, let's remove these to make it a little easier. You can see where it hits this blue line, which is a moving average line, and it sold off, right? So that's the resistance of the previous day. So that would be our entry point if it pushes up the next day. That's exactly what happened. It pushed up above it, squeezed up, rallied up, and even if you look at like a lower time frame, you guys can see the breakout in that range of that resistance there. So now as the stock continues to rally its way up, we're watching on the first pullback exit, excuse me. So in and out of the position in about an hour and a half, which is really, really good. And then the reason why we got out is because of this, right? Sold off, just more volatile. Yeah, and there could be a new trend if it dips down to 112, maybe we could hold this position for a couple hours, see what happens, see if we can get some support on that trend line. But yeah, very, very easy trade, worked very well, just textbook breakouts. The next one that we took a trade with was going to be the one and only MAGS. So MAGS represents the Magnificent Seven. So the main reason actually why we got in on this position was because we looked at this huge sell-off. The sell-off for me is really one of the huge indicators why we got in, because it sold off down about 33% in about 3 months. This is a huge sell-off. Now, the Magnificent Seven represents the top 7 companies in the S&P 500. So it has Microsoft, Google, Tesla, Nvidia, Amazon, Apple, Meta. So yes, there is some overlap with some of the positions that we're in on, but I mainly got in on this thing because of that sell-off, right? And looking at that hourly time frame here, ideally, we're waiting for a new trend to form, and we kind of saw a little bit of the support coming right there. And honestly, the approach is super simple. These are great blue chip stocks. This is a great ETF. If this does sell off, which it easily could have, then we are going to average down. Yes, we got a little lucky because literally we bought it and then the very next day Trump announced the pause of the tariffs, and this caused the market to absolutely explode. And this ETF in a single day went up like 10%, something crazy. So now we're up about 6% on it, and it's performing very, very well. So, we could literally just wait for a dip down, maybe below these moving average lines, or we'll just continue to hold it and average down to see if it will ever recover back up to like $50 to $58. I think that this is a good approach, and it's just using basic dollar cost averaging, nothing too crazy. Saw it, took advantage of it, right? And that's what trading and investing is all about, is seeing an opportunity and acting on it. And one other thing I want to show you guys here, people ask me, Carter, how do you know when to go heavy on VU? Well, this is the daily time frame, of course. And as we zoom out here, look at this beautiful trend line. This is crazy. And this is kind of one of the things that I saw was this great trend line. Let's remove these moving average lines, where it hits this several times, establishing really hard support. So now I'm just going to keep an alert, down here at like the 400 and, 480 mark. We'll throw an alert there. As the markets dip below it, we'll just cover profit and buy more, right? And I think that's a really good approach, just using a basic trend line, nothing too crazy, but still one that works very, very well, because history just tends to repeat itself. So guys, I hope you guys all enjoyed this. If you have any questions, feel free to ask down below, and make sure you guys, subscribe, check out our school code Spring25 for 51% off. So I'll see you guys in there, and check out our merch. We have a whole bunch of new trading merch. I'm super excited for it. So we'll see you guys. Hope you guys enjoyed it. Like, subscribe, and take care.